You have lived in Chiang Mai for 4 years. Your retirement visa extension is due. 800,000 baht is sitting exactly where it needs to be, in your Bangkok bank account, in your name, in baht. You show up to immigration. Your extension is denied. Not because the money isn't there, not because you overstayed, because the branch manager's letter you submitted didn't carry the specific certification stamp that Chiang Mai Immigration started requiring this year. A requirement that is not written anywhere on the Thai Immigration Bureau's official website. Your permission to stay expires in 11 days. You are one bureaucratic technicality away from being an overstayer in a country you've called home for 4 years. That is the retirement visa in 2026. A system with 3 overlapping financial methods, 2 of which are legally unavailable to most British, American, and Australian retirees. And nobody in the system will tell you that up front. This video covers every number, every trap, and every deadline that defines the Thai retirement visa this year. Let's start with what's actually at stake, in baht and dollars. The visa extension fee is 1,900 baht. That's roughly $53. It is the cheapest line item in this entire system. And it is the number most people quote when they say the retirement visa costs almost nothing. That framing is dangerously incomplete. Here's what the full annual cost actually looks like for a 67-year-old retiree living in Hua Hin. If you're under 70 and in reasonable health, health insurance from a Thai-approved insurer runs between 5,000 and 25,000 baht a year. Call it $140 to $700. Manageable. But if you're 75 with a pre-existing condition, high blood pressure, diabetes, anything on record, that same mandatory health insurance can exceed 100,000 baht per year. That's just under $3,000. Not the visa fee, the insurance. That is the real annual cost variable for older retirees, and it dwarfs the visa fee by a factor of more than 50. Then there's the deposit, 800,000 baht, roughly $22,000, 18,500 pounds, or 34,000 Australian dollars. Must sit in a Thai bank account, not your overseas account, not a fixed deposit back home, in Thailand, in baht, in your name only. Joint accounts don't qualify. And here is the part the visa agents often skip. That money is effectively immobilized for a minimum of 5 consecutive months around each renewal. 2 months seasoned before your application date. 3 months it must remain after your extension is granted. 5 months where dipping below 800,000, even by 1 baht, puts your next extension at serious risk. If you're earning 4% annually on that capital somewhere else, locking 800,000 baht in a low-yield Thai savings account costs you roughly 32,000 baht a year in opportunity cost alone. That's another $900 that never appears in any visa cost breakdown. Now let's look at how the financial proof actually works, because this is where the system breaks down for the majority of Western retirees. There are 3 ways to demonstrate financial eligibility for a non-OA retirement visa extension. Method 1. The lump sum deposit. 800,000 baht in a Thai bank, seasoned and documented as described. Method 2. The income method. 65,000 baht per month. That's roughly $1,800, verified by an income affidavit from your home country embassy in Bangkok. Method 3. The combination method. A lower deposit combined with monthly income, where the 2 figures add up to 800,000 baht equivalent. For example, a deposit of 400,000 baht plus monthly income of 33,000 baht, a popular route for retirees whose pension covers part of the requirement. Here is the problem. The income method and the combination method both require a certified income affidavit from your home country embassy in Bangkok. The British Embassy permanently stopped issuing those letters in February 2019. The US Embassy suspended the service in January 2020 and has never reinstated it. The Australian Embassy has similarly withdrawn income certification. That is 7 years for British nationals, 6 years for Americans. The 3 largest Western retirement populations in Thailand locked out of 2 of the 3 financial methods. The 800,000 baht deposit is not one option among 3 for most Western retirees. It is the only option. If you're a British retiree with a UK state pension of £980 a month, roughly 43,000 baht at current rates, you cannot hit 65,000 baht per month in income. You cannot use the combination method via embassy certification. You need the full 800,000 baht in a Thai bank. Full stop. It's worth briefly noting the non-OX visa, a less common variant that requires a 3 million baht deposit in a Thai bank. That's roughly $83,000. The trade-off is a longer initial validity period. For most retirees, the non-OA remains the standard route, but the non-OX exists for those who prefer fewer annual interactions with immigration. Let's talk about health insurance, because this is the requirement that surprises people the most, even long-term visa holders. Since October 31, 2019, the non-OA visa requires mandatory health insurance from a Thai government-approved insurer. The minimum coverage is 40,000 baht for outpatient treatment and 400,000 baht for inpatient treatment per policy year. The premiums are age-dependent in a way that compounds quickly. Under 70 and healthy, 5 to 25,000 baht per year. 70 to 74, expect 25 to 60,000. 75 and above, with any documented pre-existing condition, you're potentially looking at more than 100,000 baht per year just to stay legally insured and visa compliant. There's an important nuance here. The insurance requirement applies specifically to the non-OA visa, both the initial entry and annual extensions. If you entered Thailand on a non-OA and converted to an annual extension of stay in country, the insurance requirement still applies at each renewal. Do not assume a grandfathering exception. Now, the document trap, because this is where even experienced visa holders get caught. The official rule says the 800,000 baht must be in your Thai account for 2 months before your extension application. That's what the Thai Immigration Bureau's guidance states. But Chiang Mai Immigration and reportedly other regional offices have in practice been requiring 3 months of unbroken balance history. Not 2, 3. There's no circular. There's no update on the website. It's simply what officers are asking for when they review your bank statement and bank letter. If your agent is still telling you 2 months is enough, your agent is working from outdated information. The practical implication: you need to have your 800,000 baht fully deposited and untouched for at least 3 months before your extension date, not 2. And that certification stamp on your bank manager's letter needs to be the current version that your specific immigration office accepts. Call ahead. Confirm with the bank. Do not rely on last year's paperwork. Here's the broader picture worth acknowledging. Thailand's macroeconomic environment in 2026 is genuinely favorable for retirees. GDP growth of 2.54% in 2024, inflation cooling to just 1.37%. The cost of living is stable. The baht is not in freefall. And the retirement lifestyle math still works for those who can navigate the paperwork. The country isn't the problem. The bureaucratic execution layer is. So what does a smart, informed retiree actually do with all of this? If you are British, American, or Australian, and you've been told you can use the income or combination method, confirm that with your embassy directly before your next extension. If your agent is referencing embassy income letters, ask them when they last successfully submitted one. The answer should concern you. If you're approaching the 3-month window before your extension, your 800,000 baht should already be sitting in your Thai account. Not going in this week, already there. If you're over 70 and haven't reviewed your health insurance premium recently, do it now, before renewal, not during. The Thai-approved insurer list is maintained by the Office of Insurance Commission. Your policy must be on it. A cheaper overseas policy does not satisfy the requirement. One thing to remember, the Thailand retirement visa is not a trap, it's a system. But it's a system where the informal practices at regional immigration offices can diverge from what's written centrally, where 3 of the largest Western retirement nationalities have been quietly locked out of 2 of the 3 financial methods for years, and where the dominant annual cost variable isn't the visa fee. It's the insurance premium your agent quoted you once and never revisited. Know the numbers, know your method, know what your specific immigration office is currently accepting. That is what separates a clean extension from 11 days of legal jeopardy. For more on how this intersects with Thailand's income remittance tax rules, the DTV visa for working-age expats, and the full financial picture of long-stay life in Thailand, subscribe to the Bangkok Brief newsletter at thebangkokbrief.com and subscribe to this channel so you don't miss the next one.